Hello, friends. In this video, we will see how one big political event in Venezuela can shake global markets and create new chances for Indian companies like Reliance and ONGC. We will break it down in simple steps so that anyone, even with the basic financial knowledge, can understand what is happening and why it matters. Welcome to our channel FutureReady, where we explain finance, markets, AI, tax, and business stories in simple words. Every week, you will get easy to follow breakdowns of big events and insights on how they affect your country, your money, and the Indian economy. So, this one event in South America started a chain reaction. Many parts of the global economy got linked because of it. Let us see how that happened step by step. So, what was this big event? This weekend, something very dramatic happened in Venezuela. Here is what happened. The US stepped in and took control of Venezuela. They captured President Nicolas Maduro. The US then said it would run the country for some time. As you can guess, this created a huge fear and doubt in world markets. Investors became nervous and worried. The first reaction to this fear was a rush towards safety. When markets are scared, investors do not want risky assets. They want safe and stable places for their money. This brings us to the idea of a safe haven asset. You may have heard this term before. In the time of crisis, investors make money out of risky things like stock. They put it in things they believe they will not lose value easily. Gold and silver are the common examples. Investors flocked to bullion amid escalating US Venezuela tensions. The word flocked means they moved very fast and in large numbers. Many investors rushed at the time into gold and silver for safety. So, what happened after that? Gold futures jumped up by more than 2000 rupees per 10 gram. And silver even moved more. Silver futures went up by almost 10,000 rupees per kilogram. Now the story takes an interesting turn. Gold and silver were moving a lot, but the oil market, where we expect big moves in such crises, stayed calm. This is an important question. Venezuela is a very big country for oil. It has huge oil resources. Normally, a crisis there should push crude oil prices very high, but this time, this did not happen. To understand this, we must look deeper into the headlines. We must see the gap between what could happen and what is happening. Venezuela has about 18% of the world's proven oil reserves. This is the largest in the world. But there is a big problem. Because of many years of sanctions and poor management, Venezuela now supplies less than 1% of the oil in the world market. The market already knows it. It understands that there is a big difference between the oil in the ground and oil actually being sold. So we get a two-speed outlook for oil. In the short term, nothing much changes because Venezuela was already producing very little. But in the medium term, things can change. If US companies enter and invest money to fix and upgrade the oil system, Venezuela can produce much more oil. More oil supply in the future can push prices down. This strange situation in the oil market creates a special opportunity. Two big Indian companies can benefit from this. These two companies are Reliance Industries and ONGC. For Reliance, the opportunity is to get cheap oil. For ONGC, it wants to finally get back hundreds of millions of dollars that it is owed. Now let us see how both can gain. For Reliance, the main strength is technology. Its huge Jamnagar refinery is very advanced. It can handle very heavy, dirty, high sulfur oil from Venezuela. Many other refineries cannot easily process this type of oil. It can damage and block their systems. Because the oil is hard to process, it is usually cheaper. In the past, it was sold for about $5 to $8 per barrel, less than the main oil price. If Reliance can get a regular supply of this cheap oil, its profit can increase a lot. For ONGC, the story is more direct. ONGC has more than $500 million in unpaid dividends stuck in Venezuela projects. As US led change in Venezuela can unlock this money, ONGC could bring back this money to India and make its financial position stronger. Now let us zoom out and see the main lessons. There are few key points. First, the big geopolitical shock usually cause a flight to safety. This means investors quickly move to safe assets like gold. Secondly, over the long term, headlines are not the most important thing. The real drivers are fundamentals. So, this Venezuela story shows how one country's crisis can become another country's opportunity, and how those who are ready can turn risk into growth. If you found this video useful, do like, share, and subscribe our YouTube channel so that you won't miss out our next easy explainer on another important topic. You can also connect with us on our WhatsApp channel, Facebook, and LinkedIn page. Links are given in the description below. Thanks for watching the video.